Hi guys, this is Dan from FINLIFE and today we'll be talking about Tinplate India Limited. So this is one company which is a subsidiary of Tata Steel and Tata Steel has approximately 75% holding in the company. The company has been there for a long period of time in 1920 the company will mark its 100 years of inception. So that's a wonderful thing and the company has been obviously it is into the business of tinplate manufacturing and has been the first tinplate manufacturer in India. Majorly, it is exporting around 20 to 25% of its produce to various world locations in the world, majorly which include Southeast Asia, Middle East, and some regions of Europe. The company has been there for the majorly single manufacturing unit. The company is located in Jamshedpur, Jharkhand, and has cold rolling mills, electrolyte tinning lines, and world class printing and lacquering lines. So majorly most of the tin products that you see, whether it's a canister or maybe a small fancy packaging box for some liquor company or let's say watch company or anything, whatever tin manufacturing you are seeing, most of it is made by tin plate. In domestic market, Tinplate has a share of more than 40% and has 8 offices all around the world. So let's talk about the company. If you check out the market cap of the company, the market cap of the company is currently standing at 1616 crores, whereas the assets in the company stand at 1106 crores. The book value in the company is at 64.64, which is pretty decent, and if the company is getting completely liquidated, you will at least get 64 rupees per share. The debt in the company stands at 143 crores approximately, and the sales of the company have been increasing from 2014 to 18 at a rate of approximately 16%, which is pretty awesome. Usually the company, the demand is always more for the product and the supply is less, so you will continuously keep on seeing that the produce and the turnovers of the company will continuously keep on increasing, and it's a wonderful thing. In 2014, the sales of the company were at 1059 crores, which increased to approximately 1917 crores in 2018. The profits in the company were in 2014 at 63, which increased to around 73 in 2018. The profits are at a margin of around 3.5% to 5%, which is very low. So the major problem in the company is that the profit margins that the company is trading on are extremely low. So that is not something which is very good about the company. If you see the earning per share of the company in 2014, the earning per share was 4.81, which increased to approximately 6.98 in 2018. Overall, the profit and earning per share growth rate has been around 9%. If we check out the future earning per share and extrapolate it by 9% itself, we can expect that the future earning per share of the stock will be into 2023 it will come out to be 11.12 in from 2019, 2020, 21, 22. You can see all the earning per share growth in front of your screens. The historical price movement, if you see, the prices have been fluctuating quite a bit. In 2014, the prices were at 77.8, which fell down in 2015 and then increased to 2016 at 81.4. Then further, the stock kept on increasing, and in 2018, it went till a high of around 161. Overall, the company has been correcting for some period of time. The stock went to a high of approximately 250 and now it is trading at 150 rupees. Usually the PE of the stock has been trading between 13 at the lowest point and the maximum level has gone to 41.30, but we won't consider 41.30 because at that time the profitability of the company fell down massively, majorly because of some expansion which the company was doing. So that is why we won't consider that factor as for evaluating our prices, because that will be a misleading calculation. So majorly for the lowest PE band we'll take it as 13.24 and the highest PE band we'll take it as 23.11. So overly, if we check out the returns, the returns will be calculated by just multiplying the lowest PE by the future earning per share and the highest PE by the future earning per share. That will give us that the stock should trade somewhere between 147 and 250 rupees over the next 5 years. The current stock price being around 150 rupees, On the basis of assets, the company is looking good as per investment, but on the basis of the earning per share growth rate, the returns are not looking very good. But we still have some good feel about the company, that the company can actually deliver you good returns, because it is majorly overvalued. The reason being, first of all, the sales are more than the market cap. That speaks something, that if the sales are more than the market cap, that does tell you that the market cap still has a potential to grow. Further, if the company works up a little bit on its profit margins, the company can actually do pretty well, because in 2016 the profit margins went up to a high of around 8.5% approximately, but in 2018 it came down to around 3.8%, which is not very good. So overall, if you see, the company is pretty strong, and if you see the auditors, Deloitte as a company is the auditor, so ethical parameters, we can't question the ethical parameters, being first of all auditors being Deloitte, and secondly Tata, it's a company of Tata, so obviously that's pretty ethical in itself. Mutual fund holdings are very low. Mutual fund and institutional holdings are at around 1.21% only, and the dividend yields are around 1.3% year on year. So that is what I wanted to explain about this company. Further, you can check us out on YouTube, particularly you are checking us out, you're seeing, and please subscribe to our channel. Further, we've got a course on Udemy which you can see, where you'll get insights about how to start trading, how to start investing and analyzing companies crisply and simply, to so that you can get good knowledge, and how you can make the fundamental models that we are creating and which we use to make our videos also. So it'll be pretty useful. Further, the videos are from very basic, so it'll be very useful for you if you don't have any knowledge and you want to start from scratch also, then also you'll be able to use Udemy and enhance your knowledge. One more thing about Tinplate company of India is that the company has been growing, it has been doing wonderful sales, and always usually the company's demand is extremely high as compared to the supply. So the company is also thinking of expansion and growing. So in the sales also, you can see from 2014 to 2018, in 2018 you can see the sales jumped massively. That was majorly because of new expansion that the company did. So usually after every 4 to 5 years, the company is setting up new plants and growing its plants and setting up new lines for more lacquering and manufacturing of tin components, tin sheets and hot rolled and cold rolled, so that it can meet the demands of India. So that's a wonderful thing about the company. And if we see the managing director, it is Tarun Kumar Daga is the managing director, chairman is Kaushik Chatterjee. Overall, the company is pretty strong, pretty good. And if you check the net worth, return on net worth and return on capital employed, that is also increasing and has been growing at a decent rate. But in 2017, the return on net worth and capital employed did fall down, and in 2018 it again increased, and to around RONW went up to 10.81, and ROCE went to around 18%. So that is what I wanted to explain about Tinplate company of India. Overall, the company is looking strong and we are getting a good feel from the company. So that's about it. Keep liking and sharing. Signing off, Siddhant Gold from FinLife.